my talk today is, as the title notes, is basically the gift of uncertainty. And uncertainty has been a bit troubling for a lot of sectors of the market, and I suspect it's going to get more troubling going forward. But one sector that it has actually been a gift for is, of course, as we know, the gold sector. Gold is actually in the midst. I hope it's in the midst of, not at the end of, uh, one of the best price rallies in years, really. It's been a $400 move basically since the start of the year. And as is usually the case, gold's been helped, at least from the start of 2025, by a pullback in both yields and the US dollars. They both declined some since the start of the year, although I don't think they declined enough to account for a $400 move. As most of us know, central banks are continue to be buyers, um, fairly heavy by historic standards, and that's also obviously helping. But I think on top of that, there's there seems to be a significant bid from, you know, let's call it the generalist part of the market that's viewing gold as a hedge against uncertainty. I find that interesting because that hasn't usually been the case for generalists. Certainly, gold bugs, if you will, have always viewed gold as a hedge against uncertainty, stupidity, mistakes by governments, what uh, whatever. Um, Most of the rest of the market outside of the gold community, I don't think has really shared that view. It's viewed plenty of different things as being good hedges. Gold is just one of many of them, but for some reason, there seems to be a significant increase in the number of market players that have decided gold's a good place to be to maybe hide out in the face of what looks like it's going to be a fairly crazy market this year. There's just no end of weirdness coming out of Washington right now, and from one day to the next, you just never know what's going to happen, and that's definitely helped gold. Um, you know, you can see the chart, and it's a thing of beauty. I recorded this on Tuesday, and Tuesday itself was a big drop, but that's really the first significant pullback we've seen really since the middle of December. It's been a pretty relentless move up, and it's been relentless enough that uh, we're finally seeing the gold price positively impact valuations on, it's mainly been gold producers and developers, but and even now, I would argue that the move that we've seen in most of those stocks doesn't really account for the kind of move that we've seen in the gold price. But at least we're seeing something. There were certainly significant periods in the last couple of years where we saw good moves in the gold price, and gold stocks basically did nothing. We are getting some move this time. Although, like I said, it's mainly in the producer and the developer end, but I'll take it. Um, you can see here that the chart on the left is 10-year yields. Chart on the right is US dollar index. In the case of both of them, they topped out right about at the end of 2024. So both of those things have been helping. This has been part of the reason for gold's move. Well, I said that the 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 general craziness and uncertainty is, in my opinion, at least as much of a reason, if not more of a reason than this. But it's nice to have both these things going the right way, quote unquote, in terms of what you want to have happen for gold prices. I don't know how much farther we're going to get when it comes to yields. I mean, they've declined, and that's going to help. But we have seen just in the latest readings, we have seen another uptick in CPI. I think if we see these tariffs that Trump's talking about actually start showing up, and the ones against Canada and Mexico are supposed to kick in on March 1st. If he follows through with that stuff, that's definitely going to have a positive impact on CPI. You will definitely see CPI increase more with the kind of tariff numbers they're talking about. That's going to put the Fed in a fairly tough spot. I mean, they were talking about doing a couple of more cuts Going to be tough for FOMC members to justify that if they know these tariffs are coming in, because CPI is already getting to the point where it's questionable whether it makes a lot of sense to cut from here. So we may not get those, two or three more rate cuts that everybody was hoping for. At the time, 3 or 4 months ago, we were kind of counting on those rate cuts to help support the gold price. Obviously, we haven't needed them, so I'm less concerned in terms of gold price moves if these cuts end up not happening. Um, I don't know that I believe the numbers that I'm seeing coming out of most of the economists on Wall Street. I mean, most of them have actually increased their growth rate estimates for this year. I'm having a lot of trouble buying into that idea, mainly again, due to uncertainty. It, the more uncertain things get, the more consumers see daily headlines about tariffs and layoffs and job cuts. I think that's going to start impacting things. You did see in the last reading there was a fairly significant decline in consumer sentiment. I'm not someone that takes sentiment surveys as seriously as some people do. I found a lot of the time they don't always correlate that well. But I think if the shit show in Washington continues, I think if things will get to a point where you will start seeing spending impacted, and of course, consumers decide to stop spending, we all know what's next. I mean, that's basically the definition of a recession. So, whether we get an actual recession is going to depend on how long these tariffs stick for. I mean, if Trump puts in 25% tariffs all over the place and they stick for a significant part of the year, I don't see how the U.S. avoids a recession. I think it's pretty much guaranteed. So, we've got to keep that in mind. Um, if you take a look at this chart, which I think is quite an interesting one, this is not economists. This is investors, large investors. They do these surveys all the time for these guys, and you can see in the latest survey, you can see this kind of mauve circle on the right side of the chart. There's a pretty big uptick in the last couple of months, and I think it's going to continue where investors are increasingly concerned that we're going to see a stagflationary environment, essentially higher inflation and lower growth. And I think if we get an extended tariff scenario, that's the probable outcome. We're not seeing that yet impact. We're not seeing it impact base metals. I mean, if a lot of traders believe in the stagflation story, they're certainly not trading it on the base metal side. I mean, you can take a look at this 1 year copper chart. I mean, copper looks fine. I mean, it's fairly strong. I mean, obviously, some of the things that help the gold price help all commodities. Specifically a declining U.S. dollar. That always helps them, but I don't think the U.S. dollar decline accounts for a move from 420 to 480. I mean, obviously, there's obviously demand out there for copper, so at least at this point, it's not a big problem, but I am sort of keeping an eye on it and keep watching for a slowdown in the US because you might see some negative impacts on the base metal side if that comes to pass. So, I mean, just to sum it up, I mean, I'm gonna be short and sweet here. I mean, you know, we're finally seeing some positive movement in gold equities. I mean, take a $400 move, but I guess if that's what it takes, that's what it takes. And even now, like I said, I don't think the price moves that we've seen in the producers really account for the move we've seen in the gold price. There's still, in theory, there's plenty of room for those stocks to move higher still. I mean, they should be putting up just crazy good numbers through this year with gold prices at $2,900. Base metals are trading fine, like I said, but I am going to keep a closer eye on that because I am concerned that we're going to see a slowdown in the U.S. if this tariff stuff doesn't go away. And right now it doesn't look like it's going to. And I have no idea what kind of numbers they're looking at when it comes to job cuts across the board. I mean, they've been announcing layoffs almost daily, and obviously, if they do enough layoffs, that's going to be enough to send basically employment into into a negative trend. And again, you get into that situation, your odds of a recession go through the roof. Um, so far, you know, growth stories and turnaround stories in the gold space have done quite well. I mean, obviously with gold at all-time highs, people are looking for stocks that are going to be increasing production. Uh, there's one of those presenting today. I think new discoveries will also get traction. Certainly, the last few have. There's enough positive sentiment, although it's certainly not. I wouldn't call it a crazy bull market. It's not lifting all boats. It's still selective, but the sentiment's strong enough that somebody makes a decent discovery. They're definitely getting market attention for it. They're getting priced for it, and I've hopefully got a couple of those uh, presenting here with me too. This gold price move is so strange in that, to my mind at least, such a large segment of it is based on this, buying because of uncertainty. I have no idea what my price target would be for this because it's just such a weird situation. But we are starting to see more generalist money come in. I think that'll continue, and that it will particularly continue if uncertainty gets bad enough that it starts slowing things down generally in the economy. If gold's still trading around $3,000 and gold companies are generating crazy margins, we should see more. We should see finally more generalist money coming into the space. So I think all in all, we've got everything in place to have a pretty good year. I'm keeping an eye on the U.S. economy just in case Washington manages to make things so crazy that it generates its own slowdown. But aside from that, you can't complain with gold about $2,900. I think we're gonna have a pretty good spring. Q1 tends to be good for these stocks, and based on right now, obviously Q1's been great so far, and I think it's probably going to continue to be pretty good. So I think we're going to have some fun here.